Hello, everybody. Welcome to our third webinar here at Ortiz Equity Group. I am going to be going over our newest webinar, which is going to be understanding the general partner team. And I'm just going to minimize myself here so that you guys can get a full view here. All right, guys. So welcome again to our third webinar here. Today, we're going to be going over understanding the general partner team. Go ahead and get started here. So we're going to give you a quick table of contents of what's going to be in the presentation. So introduction to the team. What is a general partner, GP? A general partner's key responsibilities of a general partner, formation and structure of real estate syndication, selecting a general partner team, investor's perspective, what limited partners should know, top 5 myths about general partners in multifamily, opportunities to learn more or get involved. All right, so we'll just kind of get right into it. So introduction, who we are, who is our team. So Ortiz Equity we're a team of experienced real estate professionals who specialize in acquiring and managing multifamily properties in the USA. We understand the challenges of investing in real estate, especially when you're short on time. That's why we offer a passive investment opportunity that allows you to invest and diversify your portfolio of multifamily properties without having to control or worry about a day-to-day management. And again, a little bit of background on our team and who our sponsorship team here. So our sponsorship team has 50 plus years of collective real estate experience and has a track record of success across various industries ranging from hospitality to technology, government, small business, and finance. And just a little bit of background on the team here. So we have Charles Seaman as one of the managing partners, Paul Senior, another managing partner, Prashant Kumar, managing partner, Ryan Murphy, general managing partner, and then myself, Jefferson Ortiz, and my partner, John Ortiz. A little bit of a track record here. So 17 deals completed till date, 7 full cycle deals completed to the date, 1,647 units under management, 146 million assets under management, 250 million plus in total transactions, assets owned in North Carolina, South Carolina, Georgia, Florida, Texas, Indianapolis, and Arizona. All right. So now that we've gone over that, so what exactly is a general partner? So a general partner is an individual or entity responsible for organizing and managing the investment project. The GP or slash general partner typically takes on the leadership role and handles various aspects of the syndication, including sourcing the investment opportunity, conducting due diligence, acquiring the property, and overseeing its operations. So what are the key characteristics and responsibilities of a general partner? Management and decision making. The GP is responsible for making critical decisions related to the investment project. They develop the investment strategy, determine the terms of the syndication, and negotiate agreement with other partners or investors, right? And why this is very important when choosing a GP or when investing into a syndication is because depending on your team's track record and your team's experience for managing existing properties, they'll be able to determine and make the right decisions when coming across a hurdle or a obstacle during your repositioning of the asset. Now, the second point we have here is asset acquisition. The GP is involved in the process of identifying and acquiring suitable real estate as assets for syndication. They perform market research, analyze potential investment opportunities, and negotiate purchase contracts. And again, why this is important is because you can actually invest into a market that is not growing in population and job growth and many other aspects of it. And so by you working with an experienced general partnership team, you have that background that they've actually done deals in the market or in very similar areas within the market. So it gives you a lot of confidence. And why this is important is with multifamily value add, we're always trying to see how we can potentially increase the rents or lower expenses, right? To increase the NOI, increase the value of the asset. Now, if you are not a professional in this specific area or market, that can go a long way because you don't know how much the rents could actually be pushed by, what's the good areas to stay away from, what are the new development that's happening, and many more. Now, the third point we have here is capital raising. The GP's primary responsibility is to raise capital from investors who participate in the syndication as limited partners, aka LPs. They create investment offerings, present the opportunity to potential investors, and secure commitments from those interested in participating. Now, as general partners and as syndicators, a lot of times we actually have a lot of money at risk when it comes to deposit, due diligence, inspection report, environmentals, and many more. So we as general partners will take on a big role and a big risk, but we understand that we are providing the best of the opportunities possible to investors. So that's why we're involved with bringing in as many investors as we can to participate into these amazing projects. Now, a few other parts of the GP team or other other parts of the GP or asset management, investors relations. This is another role as GP. Now, this role of the GP maintains communication with LPs and limited partners through the project's life cycle. They provide regular updates on the property's performance, distribute profits, and address any questions or concerns raised by the investors. And why this is important is we always want to have a transparent relationship with our limited partners and have a clear communication between what's going on with the asset, what are some of the issues that may arise, how we're going to address them, and how we're going to move forward. So it's very important to have a good relationship and a good communication with your limited partners, and that way there's just transparent communication throughout the whole life of the project. Now, the other point we have here is asset management. Now, once the property is acquired, the GP oversees its day-to-day operations, including property management, leasing, maintenance, and financial reporting. They ensure that the investment is performing as planned and take appropriate actions to maximize returns of the investments, right? One thing is closing on the asset, and then the other thing is raising the capital, due diligence, all this. But then one of the most important aspects of a multifamily syndication here is asset management. And the reason why this is so important is because that is where the project will either go towards according to plan or fall apart, right? So asset management is probably one of the most crucial parts of this whole business. And that's why it's always important to work with an experienced asset management GP team that has done this in the past, that has a track record, that has repositioned assets, because it's super, super crucial. And I think capital raising is reported there. So we already talked about that one. All right. So let's talk about the formation and structure of a real estate syndication. Okay. Formation and structure of a real estate syndication. Syndication structure and legal considerations. Choosing the appropriate syndication structure is crucial and depends on factors like the size of the investment, the number of investors involved, and tax implications. Common structures include limited liability companies, aka LLCs, limited partners, which again are LPs, and general partners, which are also known as GPs. Legal considerations involve compliance with security laws, ensuring proper disclosure to investors, and adhering to regulatory requirements. And here at Ortiz Equity Group, we work with a very experienced team of lawyers, securities lawyers, and accountants. We work with many professionals that specialize in the syndication space, and that's really important when choosing a team or when formulating a syndication. Now, a little bit more details here. So partnership agreement, operating agreement, also known as the PAOA. The partnership agreement and operating agreement or legal documents that govern the rights, responsibilities, relationships between the GPs and LPs in the syndication. The partnership agreement outlines the overall structure of the syndication, the roles and obligations of each party, profit sharing arrangements, and dispute resolution procedures. The operating agreement details the day-to-day operations, management, and decision-making process. So this is one of the legal documents that is completed with every transaction or most syndications. So again, GP duties and obligations to limited partners. As syndicators leaders, the GP has fiduciary duties and obligations to act in the best interests of the LPs. These duties include conducting thorough due diligence on potential investments, sourcing, acquiring suitable properties, managing the assets, ensuring compliance with relevant laws and regulations, and providing regular and transparent communication to the LPs. The GP is also responsible for raising capital from LPs, distributing profits, and addressing any concerns or questions raised by investors. So again, we work for our investors and with our investors to reposition the asset, and we all have a common goal and common mindset when it comes to this, because we're all trying to be successful in this syndication and this property and this project. So we are very transparent with our LPs, and we want to make sure that communication is always very transparent. You're always letting them know what any new updates, new ounces, new development that may be happening in that area. So what we like to do as well is we like to actually record when we're down at the property doing asset management, and give our LPs a broader understanding of how many units are being turned over, how many units have turned over, have we accomplished those rents, and much more, right? So in summary, the formation of real estate syndication involves structuring the syndicate, addressing legal considerations, and establishing agreements between the GPs and LPs. The partnership and operating agreement defines the roles, responsibilities, and profit sharing arrangements, while the GP's duties include sourcing investment, managing the property, raising capital, and maintaining open communication with the LPs. All right. So now we're going to be talking about selecting a general partner team. And why this is important is there may be many partnerships out there may be many deals out there, but you want to make sure that your goals, your mindset, your values align with the general partner team. Because then, when something happens during the life of the project, you can rely on them. You have a good relationship with them. You have good communication. So that's always really important. All right. So here are a few key points to consider when selecting the right general partner team. So the first one we like to, and I think we touched point on this, is track record and experience. You always want to look for a general partner team with a proven track record in multifamily investing. Evaluate their past projects, performance, and returns to assess their expertise to success in the field. And why this is really important, especially with larger multifamilies, that you're investing on many times millions of dollars. You're raising capital from investors, right? So track record and experience are crucial to this business. Whether you have partners that have the experience or whether yourself you have experience with syndications, is really important, and track record is crucial. Now, second point within that is consider the experience in managing properties similar to the ones you intend to invest in. This shows their understanding of the specific market and their ability to navigate potential challenges. Now, something I wanted to add to this is that our model, or what we looked for, our investment criteria, consists of value add multifamily properties. We don't buy any turnkey operations in where we can't increase the value. We don't buy D class type of assets where the property is in a D area or D location, or it's D class type of property. So we have a strict investment criteria that we look for and that we analyze. So that's just, it just shows you that our focus is on this value add multifamily properties. We don't do land development. We don't do Airbnb. We strictly and focus mainly on value add multifamily properties, and we have other metrics that we look for. So that's really important, that when looking at track record, looking at experience, work with a team that focuses and is laser focused on that specific multifamily, whether there's 100 value add multifamily, because that'll be really important, as it'll show the experience that they have with this. Second point we have is transparency and communication. Transparency is crucial for passive investors. To ensure that the general partner team prioritizes open and honest communication, they should provide regular updates on their investment progress, financials, and any potential risk or opportunities. So again, transparency, communication, we're talking about this again because it's so important. Assess their accessibility and responsiveness to investors' inquiries or concerns. A reliable team will prompt in addressing investors' inquiry and provide the necessary information. Third thing we have here is alignment of investment strategy. Now, what you want to do is you want to evaluate the general partners team's investment strategy and compare it to your own investment goals and risk tolerance. Ensure their strategy aligns with your desired outcomes and provide a suitable investment approach. Now, in this case, obviously you're relying a lot on the general partner team, but you want to make sure that the asset that you're going to be investing in is something that you have the right risk tolerance for. For instance, we do value add. Again, we don't do self-storage, we don't do any of that. So that is exactly what we do. And you want to make sure that your risk tolerance is according to this. Another thing that you want to consider, and now we're getting to a little bit more underwriting, but what you want to look for is that if you're going to be analyzing a potential property in a potential market, you want to make sure that, again, population is growing, there's jobs happening in the market. So you want to do your own due diligence, right? So you want to make sure that you can mitigate those risks by doing your own due diligence as a passive investor. Now, the second point to consider here is consider factors such as target market, property types, holding period, and potential exit strategies. A compatible investment strategy will increase the likelihood of a successful partnership. So really important, again, guys, what is the market and why the market? And we're actually going to be doing some webinars on why we chose the markets that we're investing in and some of the due diligence and studying of the market that we did prior to it. What the property types, there's many different property types out there, from self-storage, multifamily, hospitality business. There's many different things, assisted living. So you just want to know what exactly is the type of asset that you're going to go after. How long is the holding period? Typically we're usually doing 3 to 5 years. Probably over the long period of time, we're going to be doing more 7 to 10 years, because we want to hold these assets and potentially not have to sell them if the market allows us to. And potential exit strategies. So again, the two options that we usually do is we will either refinance if we can get 80% of our investors' capital back, or we will sell it at the 3 to 5 year mark. All right. Fourth thing to consider is team's expertise and network. Assess the qualification and expertise of the team members. Look for individuals with a diverse skill set, including property management, finance, legal, and market analysis. Consider the general partners team's network of industry connections. A strong network can provide access to deal flow, potential strategic partnerships, and valuable resources that enhance the investment's opportunity. Guys, just bear with me 1 second here. I just want to make sure that I am recording this. So I know I had some issues last time. So just bear with me, guys. Oh, sorry. Okay. So just wanted to make sure that I am recording. All right. Sorry about that, guys. Just wanted to make sure we're recording. I know last time I had a little bit of issues with that. So, what are we over here? And thank you guys again for watching this presentation, this webinar. We did do it live, but for some reason it didn't record, so I had to redo it here. So let's hide this here, but it'll be available to you guys. High floating rate controls. Okay. All right. So we talked a little bit about this. So again, we're back to point 4 here. Consider the general partners team network of industry connections. A strong network can provide access to deal flow, potential strategic partnerships, and valuable resources to enhance the investment prospects. So again, so crucial for multifamily. Maybe in the single family space, you may be able to get away without having a experienced team or working with an experienced team, but on the multifamily, it is crucial. Point number 5 here, investors alignment and incentivize. Transparency is crucial for passive investors. To ensure that the general partners team prioritizes open and honest communication, they should provide regular updates on the investment progress, financials, and any potential risk or opportunities. Assess their accessibility and responsiveness to investment acquiring a reliable team. I think we might have already talked about that point, but again, so by considering these points, you can identify general partners team that meets the criteria of passive investors, instilling confidence in your abilities and in creating a foundation for a successful partnership in multifamily. And some of them are repetitive, guys. Some of these points are repetitive, but it's because they're so important that it's important. Now we're going to be talking about the top 5 myths about general partners teams in multifamily, and we do the sector at the end, closer to the end of every webinar. We always talk about top 5 myths of that specific topic that we're talking about here. All right, so myth number 1: general partners teams only care about their own profits. The fact is, while general partners teams do aim to generate profits, reputable teams prioritize the success and returns for all investors involved. They have a vested interest in achieving positive outcomes for their limited partners and are committed to aligning their goals with the investors. So just to kind of add to this, right? We, a lot of us, including myself, we do this as a full-time. Like, this is our full-time business. We are not doing part-time syndication, part-time 9 to 5. This is what we do full-time. This is our business. This is what we do. And we always have a common goal and a common mindset when it comes to what we're trying to accomplish with the property. We will do everything in our power, even if it means going down and living in that market for the next few months, to make sure that the business goes according to plan. We are willing to do whatever it takes, because we understand that our investors have trusted us and have trusted our team in order to be able to deliver. So this is, again, we have more in the line, I would say, than the investors in many cases, right? But again, we have the same goal, we have the same mindset. We're all trying to essentially make a profit and have a good investment that can generate healthy returns for our investors and allow us to keep growing. Myth number 2, general partners teams lack transparency and communication. And we hear this over and over again because, again, communication is key in this business, and specifically when bringing on limited partners, it's very important that, anyways, I'll go into the fact. The fact is trustworthy general partners teams prioritize transparency and maintain open lines of communication with their investors. They provide regular updates on investment progress, financial reports, and potential risk or challenges. Clear communication is crucial for maintaining a strong partnership. And again, guys, this is a really big important point. The communication is crucial. The last thing you want to do is invest with somebody and not hear from them for months. So we maintain monthly communication with our investors, and we always encourage them that if they're ever in the property or near the property, they could go and visit it so they could see exactly what they've invested. We also like to bring our investors through when we do our due diligence, just so they can get a better understanding of what they're investing in, why we love the market, why we're so excited for the project. So transparency is crucial in this business. Myth number 3, general partners teams take unnecessary risks with their investors' money. Now, the fact is, established general partners teams employ a thorough due diligence and risk management strategies to protect investors' capital. They carefully evaluate investment opportunities, conduct market research, and implement risk mitigation plans. Their goal is to balance risk and reward while safeguarding investors' funds. And one way in which we mitigate risk currently right now in this environment that we're in is we will do a lot of assumable loans, or we've underwritten quite a bit of deals where we have an assumable loan at 3.5% interest for the next 10 years. So that allows us to mitigate the risk of the high interest that we're currently experiencing right now with the market the way it is. So that is one way in which we mitigate risk. Now we also underwrite probably 100 to 150 deals before we find the right opportunity. So that allows us to, again, mitigate that risk and make sure that we're investing and we and our partners are investing in the right project at the right time with the right opportunity. Myth number 4, general partners teams are only interested in large investors. The fact is, reputable general partners teams welcome investors of all sizes. While they may have minimum investment requirements, they value the contributions of smaller investors and recognize the importance of diversifying their investors base. They strive to build long-term relations with investors at all levels. Now, why this is a really good point is because a few years back, maybe 10, 15 years ago, there wasn't these many opportunities for passive investors or the regular person to get into a large syndication or be able to invest into a large syndication. But because of social media, because of reach, we are now able to offer opportunities, again, following the regulations, the CC compliance, and being CC compliance. We are essentially able to, what we tend to do is we will do some deals where we do 506B, which means we can bring accredited and unaccredited investors, or we'll do 506C, which means only accredited investors are welcome to invest in the deal. And we've done both deals, and we've gone both ways. We strategically stay with the 506C right now because we like to put our deal out there in the marketplace, put it out there in Facebook, Instagram, social media, talk about it in our podcast. But we have done 506B deals as well. So depends on the deal, but either way, just schedule a call with our team and we can kind of talk about that a little bit farther and see but either way, there's many opportunities for you to get involved in a syndication if you're not an accredited investor. But you just have to make sure you follow the CCC regulations, which usually means that you have to have an existing relationship with the syndicate or sponsor, and which is important to have either way. It's important to just have a good relationship with the sponsor or whoever is going to be the syndicator, the GP team. So anyways, we'll leave it at that. But basically, you can get into deals being an accredited or non-accredited investor. Myth number 5, general partners teams solely rely on luck for success. The fact is, successful general partners teams rely on a combination of market knowledge, experience, and diligent research to make informed investment decisions. They leverage data-driven analysis and industry insights to identify favorable investment opportunities. Their success is based on the strategic planning and disciplined execution rather than luck one. again, guys, this is something that we talked about a little earlier today, is that we looked at 100 to 150 opportunities before we find the right opportunity that meets our, our investment criteria, what the returns that we have projected for our investors and so on. So maybe if you did one deal and you never did a deal again, you could consider that luck, but we are in it. This is what we do. This is our full-time business. So, we do a lot of due diligence when we do have a property under contract, make sure that everything matches what we have in terms of leases, the property is in the condition that we expected it, the areas in the area that we would buy. So we do a lot of pre-analysis, pre-stuff before we actually purchase an asset. We also looked at rental comparables to make sure that what our projections are can actually be accomplished by not only looking at other rentals in the market, but also talking to property managements who have that understanding, that knowledge of the market. All right, guys. So we're done with all the myths. Now we're going to be talking about taxes when investing in the U.S. as a Canadian. Now, below you will find is the graph we use with our professional cross-border accountants for best and most efficient way to invest passively in the U.S. Again, guys, we are not CPA, so do seek legal advice, but we're simply sharing one of the graphs in which we bring limited partners to invest with us. There's many different ways out there. And if you'd like to hear more a little bit about the structure or anything like that, do schedule a call with us. But again, we're not CPAs, so do seek legal advice. All right, guys. So last but not least, just wanted to mention, if you are interested to invest with us in the near future, you can go to Ortiz Equity Group. That is ORTIZ equitygroup.com and schedule a call with our team to see how we can best help you achieve your financial goals and financial dreams. We right now we are in Canada, but we focus all our time and energy in the US. That's where our investment opportunities will be. So do schedule a call with us. We're passionate about what we do. We love multifamily. We believe in multifamily. Right now is the best time to get into the market, even though whatever you see in the media. So, be greedy when others are fearful and be fearful when others are greedy. So you decide what type of the wealth you're going to be on. And that's it, guys. So thank you guys for joining us on our webinar today. Again, this was a recording because the last time we went live on it, we didn't record, so I had to re-recorded it. We do these monthly webinars. We also have a podcast called Passively Investing in U.S. Multifamily, which you can find on our website. If you guys go to our website here, Ortiz, that is ORTIZ, Z for zebra, equitygroup.com. And in here, you'll find, you can schedule a call with us. You can check out our portfolio, webinar. These are the monthly webinars that we do, and we usually will upload them here. But you can also sign up to get notified when we do have. We also do newsletters, so you definitely want to sign up for this newsletter. These are some of the webinars that we've done. The podcast. You guys click here, you'll be able to listen to our podcast. We have interviewed very successful syndicators, so you'll be able to get some. So right here, you can listen to Spotify and much more. Well, we're also on YouTube. But that is it, guys. So we do appreciate your time. Just quickly wrap it up here. Of course, my computer's slow. Okay, guys. So that is pretty much, let me just hide this. So again, thank you guys for joining us on the webinar today. We hope you found it informative and valuable. As we continue to grow and invest in multifamily real estate in the USA, we would like to invite you to join our investors list to be notified of future investment opportunities. By joining our list, you will have access to exclusive investment opportunities and updates on our portfolio, the marketplace, and what we see happening. We look forward to working with you and helping you achieve your investment goals. Thank you again for your time and support.